Hi everyone, this is Stephen Stewart, CEO of XXIX, which stands, of course, for 29, which of course is the atomic number for copper. And we're going to be one of the biggest copper developers, one of the biggest copper owners in Eastern Canada when XXIX completes its merger on December 4th with QC Copper and with Cuprum. And as we say here, we're going to be creating a Canadian copper powerhouse. We believe that to be true, and we're going to tell you about the investment proposition and why I think you should be investing in XXIX. There's real value in the assets that we have, their scale, and we have a clear plan now to get to pre-feasibility ×2 for both the assets, Opemiska, which is Canada's highest grade open pit, and for the Thierry, which is Ontario's largest copper resource. So it's exciting. Let's go. Here's our friend, the forward-looking statement. Before I get into it, just quickly, a little bit about the OR Group. I think it's so critical if you're going to make an investment into the junior mining space. It's all about the people. Of course, I'm talking my book here as the chair of the OR Group, but we do good work. We're creative. We have the ability to raise capital. We're into the hundreds of millions of dollars in equity and joint venture deals over the past few years with the likes of South 32, just invested nearly $30 million into American Eagle. Awali's been a tremendous success for us. That was a creative opportunity. Newmont is a big partner there. Agnico Eagle is our shareholders in a number of our companies. And I can assure you we had a lot of strategic interest in XXIX, as it will be one of the largest copper owners in Eastern Canada. So here's the case study. This is new for us, but I think it's really compelling. And I'm always looking to be inspired by the right people and the right companies. And here is an analog, and it's Foran, which has been a tremendous success. But if you look back to, let's say, 2019, they were analogous. They were similar to QC Copper in the sense that they had a nice resource. Okay, you can see they had a resource there, but nobody cared about them. They were a $25 million company. They had a nice resource, a good starting base, well endowed with copper and zinc. Good jurisdiction there in Saskatchewan, but again, nobody cared. So what happened? You can see throughout that whole period from 2019 to today, they didn't discover Voisey's Bay. Meaning they didn't have a major drill hole discovery. It was a process of really two things. It was de-risking and moving the project towards a pre-feasibility, because to me, that's the most important study. That's where the rubber meets the road, and you have detailed engineering, and you can really tell if this project is going to be real or not, or a mine. And then, of course, they had capital allocation. They were very successful in attracting Prem Watsa, who, of course, is Canada's Warren Buffett, as he's known, and he put in $100 million back in late 2019, early 2020, in which got a lot of attention and just snowballed. That sort of thing builds on itself, and since then they've raised a significant amount of money, and now they're at the investment decision. They're looking to build the project, but it's been a story of nobody cares about them, but they've got a good resource, and that's where I classify QC Copper and Cuprum. They've got wonderful resources. They're big. They're excellent grades, but nobody cares because look at our market cap. And so we are where Foran was 5 years ago, and we have the opportunity to go down that path ×2, because we've got two assets that are analogous to their flagship asset. That's a forward-looking statement. I'm not saying we're going to be a $4 billion company. That's not my intent. My intent is to show a path towards creating value. How we're going to do it, which includes de-risking and raising capital. Now, I wasn't just blowing smoke. You got to look at their assets juxtaposed next to ours. You can see McIlvenna Bay there. It's in Saskatchewan. It's clearly more de-risked. It's at the feasibility stage, and they're looking to build it. And it's a $2 billion company. Again, they've gone from $25 million to $2 billion over that period. Tremendous junior mining success. That's why we're all in this business. They've got infrastructure. They've got wonderful infrastructure. I'd argue that infrastructure in our assets there, you see Opemiska and Thierry, are better, and I'll prove that in a minute, or at least I'll give you some illustrations. I would say our metal endowment is larger. So we've got both of our assets, the Opemiska and Thierry, one in Ontario and one in Quebec, each have 2 billion pound copper equivalent deposits. So we've got a good starting point. And then we've got grade. I put the grades there. We've got both underground and open pit in each of our assets. Foran's got an underground deposit. They've got a copper equivalent grade. Now that's their feasibility grade of 2%, but that's copper equivalent. What you see posted for XXIX, 2 assets, that's copper only. Of course, Opemiska includes gold and silver, and Thierry includes nickel. But we're just talking about pure copper grades. Both of our assets have scale and excellent grades. And I think the most important aspect for any base metal project, outside of perhaps metallurgy, would be infrastructure. And again, I would argue Opemiska and Thierry have unparalleled access to infrastructure. Both sent their concentrate to the Horn smelter. So look, we're closer to the smelter. So I think we can make an argument. Obviously, we've got work to do. We've got capital to deploy and 2 assets to de-risk, but we have a wonderful starting point. So when this transaction closed and the company is officially known as XXIX, we will have again 2 assets with grade and scale and a path to pre-feasibility. Those are our goals. Those are longer term goals. They don't happen overnight, but we think once you start the PFS, you're about 2 years away. Opemiska, of course, our asset in Quebec. For anybody who's followed QC Copper, we've talked about it a lot. We really like it. It's a wonderful high-grade open pit deposit with an underground component to it. And now we're adding Thierry, which we acquired 9.9% of about a year and a half ago. Now QC Copper is acquiring 100% outright of both assets. XXIX will own 100% of both Thierry and Opemiska. And of course, Thierry has no royalties, which is nice. And collectively, the company will own 4.8 billion pounds of copper. And we're growing. Okay, that's important. We're going to grow and we're going to de-risk. We'll be pretty well capitalized relative to our market cap. We'll have good cash in the treasury, and we'll be moving forward. Both projects in parallel. So highlighting Opemiska, just again, I emphasize grade. Grade is king. Margin is the emperor, I always say. But Opemiska here is nearly 0.8% copper. If we were to include gold and silver, which we're certainly able to do because the metallurgies are so good, you're nearly at a full percent copper equivalent. Look at us next to the big mines here in Canada. This is all a grade comparison. Newmont, Teck, Glencore. Opemiska's head and shoulders above everybody else. And then Thierry stands up next to its peers. What I'll say about Opemiska is very well defined in terms of its mineralized envelope. We do think it's going to get bigger. We do think there's growth on the Cook and the Robitaille, and there's certainly discovery. But what we're also pretty certain about is that Thierry is not understood in terms of defining its mineralized envelope, which means growth. So in terms of delivering the pre-feasibility, we're gonna grow Thierry first. The only way to do that is through the drill bit. Our plan is to drill aggressively in 2025 to define the limits of the deposit. Here's Opemiska. Again, I just emphasized the infrastructure. It was operated by Glencore or ex-Falconbridge for over 40 years. It shut down in 1991, and it has the benefits of that legacy: infrastructure, rail, right on the property, road, multiple roads, grid power, clean, green, hydroelectric power, etc. And the airport's right there. It's a 5-hour drive from Montreal. It's very easy to get to. Wonderful place to do business, and lots of services, and a mining culture, mining jurisdiction. It's a wonderful place to do business. Now, this is our resource. This is the Opemiska resource that we published in 2024. It's a mineral MRE. It's nearly 100 million tons and nearly a full percent copper equivalent. The vast majority of that is pit constrained. So you can see we've laboriously recreated the nearly 1 million meters of drilling that Falconbridge did to create our model. We validated it. It's a lot of work, but valuable work. And then we've drilled about 100,000 meters ourselves, which culminated in that resource. And you can see it runs right to surface and it goes down to 1 kilometer. So there's clearly depth potential there, but that resource is primarily focused on the first 450 meters. But there's an awful lot of mineralization there. So that resource is largely pit constrained. There is an underground component, but really hasn't been focused on. There's more upside there down the road. But that's what the deposit looks like. And here's what our plan is. We're moving forward. We've been working a lot on this resource here, tweaking it. We've been drilling the saddle zone. We've got some really interesting results there and a new interpretation of the vein orientation, which we think is going to help our numbers. We've been doing a halo study which came back quite interesting and quite successful. Something we haven't talked too much about, but we just got the results back, and I think it's going to add a fair amount of tons. And that's the Halo study is really going to, it examines the host rock, the areas between the host rock and the mineralized envelopes and how it was treated in that resource. And we definitely think there's going to be an updated resource that's going to include more Halo mineralization. So there's definitely growth there. But once we get that all underway in our scoping study, which we're working on as we speak, we'll publish our PEA. And then we think we're about 2 years and approximately $10 to $12 million away from publishing a pre-feasibility study. So that's our stated goal. Again, forward-looking statement. We think we can achieve this. It's been budgeted and costed, but that's the general budget, and that's the general time frame to PFS, where you really do have a de-risked project. So that's our goal. Maybe things change, and maybe the copper gets on fire and everybody gets bought out, and maybe that's what happens, but that's not a strategy. That's just hoping. The strategy is really to develop and de-risk this project towards pre-feasibility. And the same thing for Thierry. Shifting gears to Thierry. So this is this is a size comparison in terms of pounds in the ground. And you can see this is Ontario's largest copper resource, up against our peers such as Magna, KGMH, Vale, Glencore. So Thierry has a big starting point. It needs a lot of work in terms of de-risking it and understanding all sorts of engineering and economics. But it's a good starting point. Just like Foran had a really good starting point, so does Thierry. But the good news is I really do think Thierry's going to get a lot bigger, much bigger. So that's the upside here, and that's the exciting part for 2025 is a lot of drilling. So I'll show you the map as I did similarly to Opemiska. There's multiple zones here. There's the K2, which is the underground deposit. There's the K1, which is the open pit deposit. And we do think they're connected. I'll show you that in a minute. And then down in the south, there's the J and the G zone, which collectively have quite a sizable resource, which I'll point out, but we know less about it. We know a lot about the K2 and the K1. There's been 250,000 meters of drilling there that just like we validated and redid all of the drilling from Glencore on the Opemiska. We've done this process again. That's definitely benefiting from our skill set that we learned. It's a very niche and unique thing to do. So we have that skill set in-house. And this is what it looks like. This is the underground deposit here, the K2 on the west. This is nearly 24 or 25 million tons at 1.6% copper. That's a sizable resource. We really do need to get it bigger in order to get the scale benefits that you need in base metals. But it's a great starting point. You can see the mineralization in the dark red at the top. That was what was extracted when the mine was in production in the 70s by a company named Umex. But you can also see the mineralized envelope, called the residual mineralization, the 25 million tons at 1.6 that's still there. And then, of course, over to the west, you can see it's open. And so we are going to be drill testing out there and expanding that underground deposit. But you can also see it comes right to surface. It's open at depth. It's open to the west. We do think there's significant opportunity or potential to grow that underground resource. Now, going back, we're going over about 4 kilometers to the east to take a look at what the K1 open pit mineralization is. This is the same system, same mineralogy, but it's a different grade. But it's right at surface, and you can see we got 54 million tons at nearly 0.4% copper. There's nickel credit on top of that, but we're just talking about the copper here because we're sure about that metallurgy. So it's clearly lower grade than the underground, but we do think we're going to get significant scale here. And what you see here, or what was modeled in that resource, only goes to 150 meters depth. And we know it goes deeper than that. And if you want to put a pit into context, go back to our Opemiska deposit, where I'll just quickly go back here. You can see our pit constrained resource there goes to 450 meters, where Thierry right now only goes to 150 meters. But is there mineralization there? Yes, there is. We've seen that in our model. And then earlier in 2024, these 7 holes were drilled. They were drilled largely to test the openness of this open pit mineralization. And clearly you can see those intersections, nearly 200 meters at at copper equivalent grades of nearly 1% and 0.75%. Now that's got nickel included in those copper equivalents, but we're seeing the copper come through between 0.4 and 0.6. So that's really where we think the copper is going to come through in this lower grade, but it's wide open at depth and laterally on strike to the east and west. So there's potentials to grow this on orders of magnitude and test the limits of this deposit. So I think we're going to have a fairly aggressive drill program announced and planned for 2025 on this project. Blue Sky is connecting the K1 and the K2. There's geophysical evidence to suggest that they are connected. We believe they are connected. It's the same. I mean, it's right on strike, and that's how Mother Nature created these types of deposits. So it's connected. The question is, can we find it? And if we do find it, or maybe optimistically, when we do find it, is it economic? So, but clearly those mineralized those deposits are related. We think there's the opportunity to connect it. That would really blow this thing open. And then down in the south, not to be ignored, is another 50 million ton resource at 0.4. That's historical. We have less data. We have less confidence in it holding it together. Not to say that it doesn't hold together. We just have less data. So clearly, we're going to go back and test it. What we know for sure is that there's legitimacy to it. There's clearly a very well endowed mineralized zone down in the south, needs more work, but the lower hanging fruit and the focus is going to be expanding locally the K2, expanding locally on the K1, and then seeing if we connect the K2 and the K1, and we'll just call it the K deposit at that point, I guess. But anyways, so look, it's a very interesting project. We plan on spending 2025 drilling this out to test the limits of the geology. Are we able to do it in 12 months? Well, we can't say that for sure, but we think it's a reasonable assumption. We can put, 2020, we haven't announced it yet, but, a robust drill program is warranted on Thierry. It has been, it's a very interesting asset. It's been capital constrained for decades, meaning nobody's given it love, attention, or capital required to develop and de-risk and move it forward. And then from there, it's moving it forward towards the pre-feasibility, just like we're doing with Opemiska. Thierry is, call it a year behind, because we want to spend 2025 drilling it out. But after that, it's basically, not to simplify it, but rinse and repeat the whole process towards a pre-feasibility. That is our stated goal. This is what the company looks like before the merger. I'll note, so this is XXIX Copper prior to December 4th, where our shareholder meeting will be completed, and the deal will be cemented and closed. We're about a $24 million market cap company, which I go back and I say, look, that's where Foran was before anybody started caring about them. We're well capitalized. We have 174 million outstanding. We are offering effectively a $12.5 million all-share deal to acquire Cuprum, which is a private company. Full disclosure, I'm the founder, chairman of Cuprum, so I'm on both sides of the deal. I think it's a wonderful deal for QC shareholders. I think it's a wonderful deal for Cuprum shareholders. I'm a significant shareholder in both, and will be continuing to support the stock. Of course, we have our position in baseload energy, but we'll be a well-capitalized company, one of the largest copper resource owners and resource developers. It's so critical to say that we own these assets 100%. We've got scale at nearly 5 billion pounds. We're relatively well financed. We need more money, obviously, down the road to achieve our pre-feasibility goals, but that will come when the time is right, and we'll look to raise capital opportunistically, like we have at the OR Group time and time again. We've shown that we're a credible group. We sniff out good projects. We put our money where our mouth is, and we're able to raise capital in very good terms. So, and then finally, again, it's about moving these forward. Have goals. And the goal is to have 2 projects with pre-feasibilities on them over the next few years. My name is Stephen Stewart. I'm the chairman and CEO of XXIX. That'll be our new name effective first week of December. And if you have any questions at all, these are my contacts. Thank you for your time.